we avoided the tech stocks because we felt we had no advantage there and other people did. And I think that's a good idea, not to play where the other people are better. But if you ask me in retrospect, what was our worst mistake in the tech field? I think we were smart enough to figure out Google. Those ads worked so much better in the early days than anything else. So I would say that we failed you there. And we were smart enough to do it and didn't do it. We do that all the time, too.
Yeah, we were their customer very early on with Geico, for example, and we saw. I don't. These figures are way out of date, but as I remember, we were paying them $10 or $11 a click or something like that. And anytime you're paying somebody $10 or $11 every time somebody just punches a little thing where you've got no cost at all, that's a good business unless somebody's going to take it away from you. And so we were close up seeing the impact of that. And incidentally, if any of you don't have anything to do in your hotel rooms tonight, just keep punching Progressive or something, and you're gonna don't really do that. The thought just happened to cross my mind. But that is, you've never seen a business, almost never seen a business like it, where and I think for LASIK surgery and things like that, I think the figures were, $60 or $70 a click with no incremental, no cost. So, and I knew the guys. I mean, they actually designed their prospectus. They came to see me, and a little bit after the original one, when they went public, a little bit after Berkshire even. And so I had plenty of ways to ask questions or anything of the sort, educate myself, but I blew it.
We blew Walmart too. When it was a total cinch, we were smart enough to figure that out, and we didn't.
Yeah. Figuring out execution is what counts. So, anyway, well, and I could be making two mistakes on IBM. I mean, it's harder to predict, in my view, the winners in various items, or how much price competition will enter in to something like cloud services and all that. I made a statement the other day, which it's really remarkable, and I asked Charlie whether he could think of a situation like it, where one person has built an extraordinary economic machine in two really pretty different industries, almost simultaneously, as has happened.
From a standing start at zero.
From a standing start at zero with competitors with lots of capital and everything else, to do it in retailing and to do it with the cloud, like Jeff Bezos has done. I mean, I mean, people like the Mellons invested in a lot of different industries and all of that, but he has been in effect the CEO simultaneously of two businesses starting from scratch. That if Andy Grove at Intel used to say, think about if you had a silver bullet and you could shoot it and get rid of one of your competitors, who would it be? Well, I think that both in the cloud and in retail, there are a lot of people that would aim that silver bullet at Jeff, and he's done it's a different sort of game. But he's, at the Washington Post, he's played that hand as well as anybody I think possibly could. So it's a remarkable business achievement where he's been involved actually in the execution, not just bankrolling it, of two businesses that are probably as feared by their competitors almost as any you can find. Charlie, you got further thoughts?
Well, we're sort of like the Mellons, old-fashioned people who've done all right. And Jeff Bezos is a different species.
And we missed it entirely, incidentally. We never owned a share of Amazon. You can go to the internet and type in airlines and bankrupt, and you'll see that something like 100 airlines in that general range, gone bankrupt in the last few decades. And actually, Charlie and I were directors for some time of U.S. Air, and people write about how we had a terrible experience in U.S. Air. It was one of the dumbest things I've ever done. And there's a lot of
you made a fair amount of money out of it, too.
Yeah, and we made a lot of money out of it.
It was undeserved.
But we made a lot of money out of it because there was one little brief period when people got all enthused about U.S. Air. And after we left as directors and after we sold our position, U.S. Air managed to go bankrupt twice in the subsequent period. I mean, you've named all of the, not all of them, but you've named a number of factors that just make for terrible economics. And I will tell you that if capacity, it's a fiercely competitive industry. The question is whether it's a suicidally competitive industry, which it used to be. I mean, when you get virtually every one of the major carriers and dozens and dozens and dozens of minor carriers going bankrupt, it ought to come upon you finally that maybe you're in the wrong industry. It has been operating for some time now at 80% or better of capacity being available seat miles. And you can see what deliveries are going to be and that sort of thing. So if you make I think it's fair to say that they will operate at higher degrees of capacity over the next 5 or 10 years than the historical rates, which caused all of them to go broke. Now the question is whether even when they're doing it in the 80s, they will do suicidal things in terms of pricing. Remains to be seen. They actually, at present, are earning quite high returns on invested capital. I think higher than either FedEx or UPS if you actually check that out. But that doesn't mean tomorrow morning, if you're running one of those airlines and the other guy cuts his prices, you cut your prices. And as you say, there's more flexibility when fuel goes down to bring down prices than there is to raise prices when prices go up. So the industry, it is no cinch that the industry will have some more pricing sensibility in the next 10 years than they had in the last 100 years. But the conditions have improved for that. They've got more labor stability than they had before because they're basically all going to, they've been through bankruptcy and they're all going to sort of have an industry pattern bargaining, it looks to me like. They're going to have a shortage of pilots to some degree. But it's not like buying See's candy. Charlie?
No, but the investment world has gotten tougher with more competition, more affluence, and more absolute obsession with finance throughout the whole country. And we picked up a lot of low-hanging fruit in the old days where it was very, very easy and we had huge margins of safety. Now we operate with a less advantageous general climate, and maybe we have small statistical advantages where in the old days it was like shooting fish in a barrel. But that's all right. It's okay if it gets a little harder after you get filthy rich.
Yeah. Charlie's more philosophical than I am on that point.
Well, I can't bring back the low-hanging fruit, Warren. You're just going to have to keep reaching for the higher branches.
Greg, I think the odds are very high that there are more revenue passenger miles 5 years from now or 10 years from now. If the airlines, if the airline companies are only worth 5 or 10 years from now what they're worth now in terms of equity, we'll get a pretty reasonable rate of return because they're going to buy in a lot of stock at fairly low multiples. So if the company's worth the same amount at the end of the year and there's fewer shares of stock outstanding, over time we make decent money, and all 4 of the major airlines are buying in stock at a...
You got to remember that the railroads were a terrible business for decades and decades and decades, and then they got good.
Yeah, I like the position. Obviously, by buying all 4, it means that it's very hard to distinguish who will do at least in my mind, it's hard to distinguish who will do the best. I think the odds are quite high that if you take revenue passenger miles flowing 5 or 10 years from now, it will be a higher number, and there'll be low cost people to come in, and the Spirits of the world and JetBlues, whatever it may be. But my guess is that all 4 of the companies we have will have higher revenues. The question is what their operating ratio is. They will have fewer shares outstanding by a significant margin. So even if they're worth just what they're worth today, we could make a fair amount of money, but it is no cinch by a long shot.
Well, I've solved my Coca-Cola problem by drinking Diet Coke, and I swill the stuff like other people swill I don't know what. And I've been doing it for just as long as you've been taking all those Coca-Colas that are... I've had breakfast with Warren when he has Coca-Colas and nuts. And
pretty damn good, too.
If you keep doing that, Warren, you may not make 100.
Well, I think there's something in longevity to be feeling happy about your life, too.
Absolutely.